Welcome back, everyone, to Not Your Advisor with NYU Grad. It is Friday, April 12th. Approximately 10 p.m. when I'm recording this, I had a busy Friday. Watched the majority of the market till about 3 o'clock. I had a sneaky suspicion how we were going to end the day, so I was watching on my mobile phone, but I didn't expect anything new to happen in the last hour. But we do have a lot to cover today, so let's jump right into it. Looking at the breadth numbers, we had 191 new highs and 333 new lows. Now, that is the third day in a row now where the new low numbers beat the new highs. This is a new trend. I mentioned after the first time it happened on Wednesday, not a big deal. One day doesn't make a trend. 3 days, now this is something to notice. 17% of stocks were advancing versus 80% declining. Looking at the 50-day moving average, you had 62% of stocks below the 50-day moving average and 39% below the 200-day moving average. So, as you know, I covered breadth at the top of the podcast every episode, and this is why. If you were listening on Wednesday and Thursday, I noticed that the new highs and new lows were expanding to the downside, and you knew that this was something that I was warning about. And you also saw the 50-day moving average readings grow. It was like 40%, then 50% below the 50-day, now 62% below the 50-day. So what does that tell you on the market? It's basically saying a lot of stocks are probably losing their 50-day moving average. Not so much yet on the 200-day moving average, because only 40% of stocks were below the 200-day, but that's in line with what we've been seeing. But if next week we see 45% below the 200-day, then you know a lot more stocks lost the 200-day. This is why it's very important to watch breadth every day. The Dow closed down 475 points, or 1.24%. The NASDAQ was down 267 points, or 1.6%. And the S&P was down 75 points, or 1.46%. The only Mag 7 that was green was Apple. And I think Apple, they were in the news about talking about AI, and they need something, right? Because they ditched the self-driving car. The Vision Pro isn't selling that great. Not many people are upgrading to the iPhone 15 Pro. So they need some type of narrative here to save themselves. So it was up marginally 0.86%, but it was just a sea of red. Microsoft was down 1.4%, Nvidia down 2.68%, Google was down 0.99 or 1%, Meta was down 2.15%, Amazon was down 1.4%, Tesla was down 2.03%. A lot of the banks reported today. JP Morgan is down 6.5%. Bank of America is down 1.5%. Wells Fargo, marginal, down 0.4%. But it was just red everywhere. Every sector this day on Friday and the week was red, other than for the week performance for the week. Communication services is up 0.21%, but otherwise everything was red. Nothing was given any reprieve. So yesterday on the podcast, and I wanted to make sure that I did say this, so I actually pulled out a clip. It's only 20 seconds long, but I mentioned yesterday's podcast that the VIX looks coiled and it looks like it's going to go higher. I have a target of $35 on the VIX. I think it will get there. I don't know how fast, but that is my target. And I also said the 10-year yield being above 4.5% is problematic for risk assets. So that clip as proof in the pudding, I'm putting there on the show notes right underneath Jon Snow taking on a army all by himself. Before I jump in to the episode, I want to just remind everyone who's a free subscriber, there is a 30% discount on either the annual or the monthly, and that ends on Monday. So take advantage of it. It's literally 45 cents per day for the annual plan and like 57 cents per day on the monthly. Yeah, I would love to have you as a premium member. I'm going to go over 35 charts with premium members only today, but I still have a lot of value to add to the free members as well. So I want you all, both premium and free, to either save the image of this grid, the loss and gain needed to break even grid, on your phone, or print it out on your printer and hang it up next to your wall, because I suspect in the later half of 2024 you're going to need it. And I never myself allow a trade to go against me more than 5%, but typically my stop loss will be 2.5% to 4%. And the reason why I operate this way is because when you exceed 10% loss, you start to what is called the inverse effect here on the gain needed to break even being more than the loss itself. So you'll see if you lose 10%, you need to make back 11%. If you lose 30%, you need to make back 43%. If you lose 50%, you need to make back 100%. If you've never done this math, it's pretty simple, but some people find this a shocker when I talk about it, which surprises me, right? So let's just do simple math here. You start your trading account with $100. If you lose 50%, you have $50. In order for that $50 to break even to $100, that $50 has to work harder. It needs 100% gain just to break even. And once you start losing more than 50%, it becomes exponentially harder to break even. 60% loss, you need 150% gain. 80% loss, you need 400% gain. 90% loss, you need 900% gain. It compounds. At the same time, it compounds to the other side. If you you can just print another chart and just cross out loss and put in gain. It's the same thing. Like if you have a 1,000% gain on NVIDIA, it'll take you that much bigger of a loss to get to where you initially invested, right? So it's just simple math, but print it out. If I had to summarize the entire session, it would be that Jon Snow defended the 50-day moving average on the S&P as well as the QQQ. That's about it. I know it was a very bad, bloody day, but look at the chart of the S&P 500 and the QQQ, or the NASDAQ. We're literally just sitting at the 50-day moving average. However, if you look at RSP, the ticker RSP, that is the equal weight S&P 500. And if you look at QQEW, which is the equal weight NASDAQ, both of those have lost their 50-day moving average. So that's not good. So how does that happen, right? Like you look at the QQQ that's holding the 50-day for multiple sessions, but then the QQEW has lost it. It's basically the mega caps. Like if you look at Amazon, Google, Meta, Microsoft, NVIDIA, they're all above the 50-day moving average. And the weighting of the QQQ and the S&P 500 is so high for the Mag 7, it's holding up all of these indices. And you might be asking, well, and why did things stop at the 50-day moving average? And I covered this on Thursday's podcast, but I'll just reiterate this. It's the same reason why traffic lights work, enough people adhere to the traffic light. So when we get to the 50-day, when we get to the 200-day, enough market participants are already anticipating a defense of that line. So it becomes a self-fulfilling prophecy. We see a red light, we typically will stop. We see a green light, we typically go forward. It's the same thing with these moving averages. But if we're at a red light and we see everyone rushing past it, and you hear fire sirens in the background like fire truck, everyone's going to break the red light. Same psychology here. Another thing that I was in the morning, I was running an errand in the car, running around Manhattan, and I was listening to Bloomberg Radio, and Susan Collins from the Boston Fed was being interviewed. And look, as a part of this Substack, I have to kind of pay attention to the Fed and the Fed members, but I'm getting so tired of their double talk, saying that they're going to cut rates, and then you get shown like a dot plot back in November saying they might cut 6 times in 2024, and then now they're saying, we may not because we need to see more data, blah, blah, blah. They're basically jawboning what they want to happen in the marketplace, and I'm getting really tired of it. So much so that I feel so dirty because I feel that central planners have very impure intentions, and whenever I read about the Fed or see an interview, I feel like I have to shower. And I'm linking the Susan Collins video interview, but afterwards, if you have the same inclination as I do and you feel like you've been violated, I'm also going to include a PBS interview of a 9-year-old boy, Wilson Liu, who is a prodigy pianist. And I see that as pure talent. And pure intention. So check that video out after the Susan Collins interview. You might they wash each other out. Let's see. So yeah, I mean, like, everyone is bearish now. Everyone. Usually, what happens? I'm not saying that they're not right, because I'm kind of bearish too right now. All the signals point that way, but I've been sharing my data points with you all. But usually, when everyone's bearish like this, usually what you would see is a short squeeze, because if everyone's short and the prices rise a certain percentage, everyone has to buy back their shares, creating a short squeeze. And that's what usually happens here. But if it does not happen, that also says a lot too. Okay? It's kind of like the red light scenario. You're supposed to stop, but if no one's stopping, something is going on. What stuck out? I mean, nothing was spared. I mentioned that. The 10-year yield is still above 4.5%. The VIX is exploding higher. Everything was weak. I'm not going to go through the weak list. Please. It would literally be a 20-minute session if I started out with what was weak from like 9% to 2% negative. For the free members, what to watch. So there's a lot of news right now coming out of Israel, Iran, or Iran about the weekend and potential escalation of war in the next 48 hours. So that's going to be happening potentially over the weekend. I feel horrible for everyone involved. I think war is very unnecessary. If I had an ability to control the outcome of all of this, I would simply have the leaders of each country take out their grievances in a controlled arena. That's right. It could just be like a 5-block radius. Give them any weapons you want to give them. You can televise it and let them go at it. Either make peace with each other and make a deal, or fight to the death. It saves a lot of innocent lives. It saves a lot of soldiers, civilians, etc. But yeah, it's just a sad situation to see. But yes, keep an eye out for that news over the weekend. Next week, keep an eye out on the 50-day moving average on all of the equities you follow to see if they're being held or if it's failing. If we bounce, how high? Keep watching the Magnificent Seven. Keep watching yields. The 4.5 line for the 10-year Treasury yield is my line in the sand. Right now, we have almost basically two of the three signals to basically indicate a change in trend. You have multiple days of yields above 4.5, and you have now breadth expansion for new lows. And I said you only need 2 out of the 3. It's only been 3 days, but if we continue to see this type of trend next week, then that is a trend change. We don't need to see the Mag 7 break down. What usually happens is when the trend changes, they will be the last to go, but the Mag 7 will get hit eventually. And again, I'm just reiterating, if you ask me which is the next Mag 7 to lose its 50-day moving average after Apple and Tesla already has, it would be NVIDIA. Because all the old money is in Meta, Microsoft, Amazon, Apple. So let's see what happens. Well, Apple's already lost it, but you get my point. So premium members, please stay on. Free members, have a great weekend. I'll see you all after the Monday session.